Hello everyone, and welcome to Fork Friday. This is our just general chat. Bring your charts, ask any questions, technical, financial, to do with the strategy, time frames, you name it. Brian can answer it.
I might be able to give you a partial answer. If you want a really good answer, I'm not quite at that level yet.
So we just keep showing up. That's all we need to do. Right, so let me come to my... Sorry, I had to shut everything down. There we are. We had the most massive bang. It sounded like Concorde for those old enough to remember. Quite incredible. So we had big electric storm. So USD CAD was one of the trades yesterday. Let's just open this up. And I'm just should take off these markings. Take the brush marks off. We don't need any of those. So if you always keep your charts as clean as you can, then it's going to be less confusing for you. So we tidy up as we go along to do our housework. So just looking at what price has done at the moment, and there was no news today, and it's decided to go all the way up to quarter theory today. I know that there's something like $1 billion of USD contracts expire today. So I don't quite know what that means for the US dollar. Right, so this was the trade yesterday. We came on at this crossover time from the yellow London session to the blue. If you haven't got this, depends what version of TradingView you've got, but if you have got the free version, I don't think you'll have enough indicators, but it is incredibly useful because you learn to see, and you can write down in a separate book what pairs you're watching and which sessions they move in. And there's a very good back testing video. It's called Currency Pair Speeds in Chance Gonan's channel, channel 20. It's under the favorites video. I do suggest you watch it, because what you can do is back test. We'll do it one of these days. We'll back test each session for 10 days, draw vertical lines, and you write down when those pairs made their sort of 50 pip moves, so you can get a general feel for the pattern of the market. So on this trade yesterday, we put the fib on. At that point, it was from the previous high down to this previous low. And you can see that it came back to reject off the 78.6. So our favorites are the 88.6 or the 61.8, but we had two good rejections. And we had drawn, or I'd drawn, a trend line down there, which isn't a brilliant trend line, but this is a, this at the time was what I felt was the best that I could get. And the entry for the trade, because you must have a pitchfork touch as one of our confirmations. So we had the pitchfork touch, we had the 78.6 rejection, and then we were waiting for it to come down under this 62 EMA, and it did that here. So that was our entry. And then we had, off that entry, it went down 25 pips. So you probably wouldn't catch the full move. It just depends, because you might have been thinking it would go down further, and then of course it starts to come up again. So you've got to retrace there, and we know the market flows. So there's 12 pips. It's come back 12 pips. So you're down now to about 13 pips. You might have had your stop profit in. So horizontal line here. So at 1 pip, once it had moved the 10 pips, I'll just move this across so it's not getting in our way. And let's pull this out a bit. So once your price has come down, you're following your 62 down. So if you follow that, if you follow your line down 5 pips to give you 1%, then 10 pips to give you 2%, then you know how you're compounding your account if you work in increments like that. But it's sometimes hard to get it right, isn't it? Because price will come back on you, and if you've got it too tight, then it takes you out. But as Brian said before, what we like to do is think about what our exit confirmations are. So a trade goal confirmation for us on this strategy is 20 pips. So therefore, once it had hit the 20 down here, you could have said, I'm out of this trade, I've done my trade goal. Or if you had managed to pinch it, you know, get yourself right down here. But it would have been hard, I think, to see that you should get out there. I might not have got out there, even though that's 25 pips, but it is your daily goal. Then it started to come back up. Now, once it comes back up, past that, breaks up above the 62 EMA. And remember, while price is below it, it is saying sell. So once price comes above, that's then giving you one confirmation for a buy. So you might be thinking now you're back at 13 pips. Do I really want to stay in this trade? Oh dear, what's going to happen? But you have to sort of have the confidence in your 78.6. And at this point, you need to look, it's reached the 50% line, and look at all the stall outs along that 50% line. So it doesn't really like the idea of going down again, does it? Even though the 78.6 should have said to us that it would reach the 0% line, because normally that would be our take profit 1. So how do you read this at that point? Well, I probably would have got very worried along here and probably got out of the trade, and then been very cross and complained to Brian later that I'd only got 13 pips, not the 25. So it's quite difficult, isn't it, to know, you know, what to do, but you can never kick yourself for making 1-to-1. So 10 pip stop loss, 10 pip gain. If you've made your 13 pips on USD CAD, you know, there's no shame in that. Now, I did hear someone yesterday say that they didn't have their 15 EMA switched on, and I do appreciate that you might be following other strategies, and it depends what paid version of TradingView you have, if indeed you have a paid version, so it might limit you on the number of indicators. But there's no point in following a strategy unless you're putting the indicators on that we tell you to put on, because you're not training your eye to follow the strategy properly. And you need to have, on this strategy, you need to have your quarters theory, which for some reason has switched itself. Oh, it's because it's not current price. I'm going to start to take this off now because we don't need that on. And I'll take off
just
that.
a quick note here, Sarah.
Yeah.
You technically could possibly view the stall out at around 25 pips here for 6 or 7 minutes.
Yes.
As an exit point, or the stall out for 6 or 7 minutes at the 15 EMA.
Okay. Yeah. Good point.
As possible exit points too, right?
Yes, you could do, especially if you thought, well, I'm going to make.
Well, if you got your 20 pips in already,
if you've got your 20 pips. Personally speaking, and we're just different, it's not right or wrong. You know, we're all looking to improve. I wouldn't have got out probably there or there, but here I would have got worried once it goes above the 62. So, you know, that's the point at which I would have thought, I'm not liking this now. Because I would have been a bit greedier. I would have thought, oh, I'm going to see if it's going to go further. But you see, in the past, I've always done very well at just saying, bang, I've got my 20 pips, I'm out. Bang, I've got 10 pips because it's stalled out, I'm out. So 10 or 20 pips, I'm fine on. But what I'm trying to do now is swing trade. So I know now my mentality is I wouldn't have got out at that point, but then I would have ended up at 13 pips again. That's the transition I find that I am at the moment. So it may be that I submit this chart to Chance and say, well, for Monday nights, he does a back testing, which is really brilliant. We can submit all our worst failings to him on a Monday night. So that's 12:30 midnight UK time. What time is that for you, Brian?
It's 7:30 Eastern time.
Great. So anyway, price went right back up here. There's 2 old pitchforks up there. And then it, if we just... I'll come back here. We'll just replay it to its current price. So we're from open of New York. When we started to look at it, we had the break and the retest of the pitchfork and the pitchfork touch. Quarter theory isn't on at the moment, but we know it's sat up there. And I'll just press that replay button from here, and we'll just play it through, and I'll talk as we go through. So London, big move down, comes right back up again, so a big swing, and then we know that it's coming into its own hot pair session, which is New York for USD and Canadian dollar, the two major pairs for that session. Sorry about that, that's just, it glitches on TradingView and it passes quarter theory. So up to quarter theory, still above the 62, and now bang, it drops. And there's our confirmation for an entry as soon as it's come below that quarter theory, and for safety below the 62. So it, and you remember on the hour you get these fake outs, the hourly fake out candle where it pushes above and does that lovely drop down, doesn't make the pitchfork, comes back up to test the 62. So this is the point at which we've been thinking that was 25 pips. It's gone back to the 20. See if I can get that quarter theory to settle down now. No. And then right back up to quarter theory, still above the 62. So it's shoveling it up, buying, 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 stalling out along, whoop, right back up. And that is at, that is, look at that, the timing at my timestamp. So there's your hourly candle again. And then as it heads into close of market, it decides it's, you know, just going right back up. So it goes right back up there, but there's nothing, there's no buy for us at this point. I can't see any other trades. Oh, it really doesn't like quarter theory, does it, at the moment? And then just chilling out really along the 62, because price will always want to come back to that. And then it close of day, it starts to fool you. So you might be thinking, oh, I don't know, I might get back into something here. But that's when you get trapped with the spreads and everything, and trapped overnight. So I never trade late at night, our time in Europe. And this will bring us up to current price today. Oh, still doing that.
There's a new scan on USD CAD. It's just been scanned on the Harmonic scanner, quite a big one, 200 odd pips.
Oh, okay. So we'll I'll finish that. Let me just bring it up to where we are today then, because I don't know what quarter theory is doing. So that's obviously formed. There's our new push up to form the new harmonic. So let's go and have a look at the size of that. So when you join, you've got im.center. I get quite a few messages from people who are learning to trade on their own, and they've got all their books and they're on YouTube and everything. And this isn't meant to be a sales pitch because we're all members here, but when I think of how much money it's going to cost them, I just don't see how. I would think it's, for an ordinary person, very rare that you could learn to trade proficiently on your own. Or maybe the way to phrase it is that it accelerates the process doing the way we do it, with, you know, having people to talk to and all those top educators. I just think it's phenomenal. Just it speeds it up. I wouldn't want to learn to trade on my own.
Yeah, there's a couple of brand new scans, as I think it was Connor that said, but they're not ready to go yet. They literally just showed up on this candle.
Is this the hourly one?
Yeah, or on the M30 on FX Choice.
Yeah, they're too fresh at the moment, but they are quite.
Oh, there's the USD CAD. So it's a shark.
Yeah, it's not. Yeah, it's not ready to go yet, but it's a give it 2 hours.
Oh yeah, that's a nice.
That's a
scan.
big one.
Yeah, lovely.
Yeah, there was two I found this morning, one for EJ, one for GJ, that I drew up and posted if anybody has looked.
So the bit we were getting in must have been, was it there? 25th at 12. This dip down here, that's where
Probably.
we got in. Interesting, isn't it? When you, start to look at these patterns. So that is an Elliott wave reversal point before it finished the push up. That must be what that dip is there, which is why we put the fib on then. So that must have been from there to there was the fib, although this is the hourly, isn't it? So no, that's not going to work, me talking like that, because this is a different time frame. So we've got new ones to draw up potentially. We've got that. We've got Euro GBP. How big is that?
That one's not big enough.
No, we like a minimum of 80. And then GBP, JPY, that looks small as well, doesn't it? Oh, no, it's not. That's 130 odd. So that one's big enough. Okay, so, and then I might be a little bit behind. I have to check in the group, see if I've missed any. Oh, and you were talking about scans on all the CHF ones. I can talk to you about that.
Yeah, Kathy asked that this morning.
Yeah. Right, okay, so that's USD CAD.
Sarah, may I ask probably a silly question, but I don't seem to have it straight.
No questions ever stupid here, I tell you. Not the type of questions I've asked over the years.
Well, if I don't ask it, I'm never going to know. So I'm getting confused with when I should be looking for a pitchfork touch versus a pitchfork 10 pip reversal. Like I was watching something, I forget even which pair it was last night, and it was on the D point and it had touched the D point, but we had no break and retest for 10 pips. So in my mind, I'm not straight into as to when you look for the retest for 10 pips and when you just go off a pitchfork touch.
With regard to the pitchfork touch, it doesn't matter where you are. You must have a pitchfork touch. That's your start point. It's your anchor. That's all we're saying by that. Then you would look at where you are on it and whether you've got the other confirmations. But we're looking for reversal points off the pitchfork, basically. So from the D point, it's come up here, then it's reversed down. Although we wouldn't be taking a sell on this scan until it's reached the median. You know, we would only be taking a buy. But that having been said, here's the reversal. Well, that's going with trend. Then you've got a reversal there. So your pitchfork touch just applies anywhere that you are. Let me come back to the 1 minute. Let's see if I can find a trade looking back. So
sometimes I think I'm waiting for a break and retest of 10 pips, and maybe I should just be working off the touch. That's where I'm confused.
No, you are waiting for a break and a retest of 10 pips ideally. Sometimes pairs are so fast they just drop straight down or up, but you must have, so your break and retest of the pitchfork, no retest, no entry, as Christopher Derrick says, is one of your confirmations. You must have it. So you must have the pitchfork touch, and we wait for the break and the retest. Yes, you need the two together.
Okay.
Yeah.
All right.
Yeah. Does that make sense?
Yes, it does. Yes, because sometimes it was just confusing me because I'm like, well, it's touched, but it hasn't broken and retested by 10 pips. So.
Yes, because I found when I've entered without the break and the retest that it's ended very badly for me mostly. So I try and be patient.
You're not always going to get your 10 pips too. You might get like 8.5 or 9 or something.
Right.
But
correct.
It was just like the trade that we were looking at, and please don't go back. But it was just you were saying, we've got the pitchfork touch, and I'm looking at it. Yeah, we've got the pitchfork touch, but we don't. Not my eye couldn't see that we had a break and a retest of 10. So I'll just keep watching. Thank you.
So that would have been here that we were in, I think. No, wait a minute. That's 6 here. It's just quarter theory is not coming on. So we got in here, So
Right.
if you look up here, this was the point. You've got pitchfork touches, 3 rejections on the 1 minute, right? So so this is telling you you've got to. So bear in mind, we know we've also got quarter theory somewhere along here. It's just a 1.36500. If I put that on for you, there. So prices come up here. It's you've got pitchfork touch, but no break and retest, and it's above quarter theory. So if you're looking for a sell, you're thinking, well, all my confirmations at the moment, it's above the 62, so that's a buy. Just break it down. Don't let it overwhelm you. Take each of the 3 or 4 confirmations you're looking at and say to yourself, what is it doing in relation to the 62? It's above it, that's a buy. What is it doing in relation to quarter theory? It's above it, that's a buy. What is it doing in relation to the pitchfork? It is rejected because this is the fake out hourly candle, so it's shot above it a bit. So you're thinking, oh, okay, it's rejected, but I've got no break and retest. Then it does a break and a retest, and you go, oh, okay, now this is a sell. So this is a sell, and if you didn't get in at that point, it gives you another chance for an entry because it comes back up again. So if you didn't get in here, you could have got in here. So there's your pitchfork touch and your break and retest. So that's one confirmation to come in for a sell. Then you need it below quarter theory, and you say, okay, I've now got a break and a retest of quarter theory. That's the second thing for a sell. Oh, whoops, no, it's gone above quarter theory. Then it comes back down and you say, okay, I've now got 2 confirmations for a sell because you're stacking them up, but you need 3. So it does that again, 3 lovely wicks off quarter theory. So those are all rejections. So it's lining up very nicely for the sell. And then you say, well, I need 1 more confirmation. And I don't like the fact it's above the 62 because that confirmation is still telling me to buy. And then bang, there's that candle down. So once it's down under there, you could be in for the sell at that point. Okay?
That's excellent, Sarah. Thank you.
And the point is that this is why you have to have everything ready and your confirmations and gain the confidence on a live account to press the button, because you've got, and the other thing is you must have 2 things, 2 nice brick walls. So, oh God, I've put the wrong thing on. Sorry. Yeah. Embarrassing. I did that to see if anyone was awake Friday afternoon. So that candle there, and if this candle is a green one, so it's a sell. So as soon as this is closed and that's opening, you're in. You've got your 10 pips stop loss here, and you're covered on 2 brick walls. Your quarter theory and pitchfork covering you, stopping the market from taking you out of the trade. So that is 2 lovely brick walls. So that's what we like. And we like the 62 in there as well if we can, but it's kind of lined up over there. So when people say, oh, I got in late, then I got stopped out, this is why this is the key thing with this strategy. It is a very precise strategy on the 1 minute, which is why we get away with a 10 pip stop loss. So once the candle's there, you've got to say, you've ticked your list. You need your trade sheet printed off. You need to be ticking each confirmation and talking yourself through each one. Then you won't hesitate when you know I do need to press the button now. Because if you hesitate, you're pressing the button down here, you're going to get stopped out. It's just not going to work for you. Because look what happens there. Back up to quarter theory, you're out the trade. No good being in down here. So, and that is how many pips down that candle. Nearly your 10 pips. Nearly your 10 pips down there. But it comes back up to quarter theory. So if you miss that entry there, bless it, it gives you another go at it. It says, all right, we'll be kind to you today. So it says, I'm going to come back up. I'm going to retest quarter theory. Here are the higher lows forming. If I put the pivots on, lazy man's high and lows. Here are your higher Yeah, I like clicking buttons. Me, I don't like, you know, drawing lines and stuff like that. So here's your lower highs and your lower lows. Hello, hello, lower low. So you know that.
Sarah, would you actually get in on the green candle you're talking about with the 62 EMA still pointing in a buy direction, or would you wait till it curls downwards on the other side of the hump?
I would have been happy to have got in there. Most definitely, because of everything I've just said. 3 rejections off the pitchfork, 3 candlewick rejections off quarter theory, the lower highs forming, a break and a retest of, well, let's see how many pips that is off that pitchfork. Only 5 there, but here is 9.3, as you said. So if you didn't get in, well, you couldn't have got in there because we're still above the 62, so it wasn't an entry. So I probably would have said to myself, well, I can see that lower high is forming and I've got a break and a retest. So I probably would have counted that myself. And then as it stacks up here, I've got the second one there. And then I'm just waiting for that 62 EMA. So I would have been confident to have got in there. And it did drop pretty fast. So that's why it's the only skill you have to learn once you've got the confirmations clear in your head and you will only learn this once you switch to a live account, is start with 0.01 penny lot sizes, set yourself $50 aside or whatever, and you've got to just keep pressing the button, because that's how I learned to be confident to say I'm okay. It's just I had to keep pressing the button on the live account, because you can't hang around another 10 pips. You've missed the entry, don't even bother, because then you're nervous the whole time. It causes you, you know, terrible situation, because you're worried about, you know, you're not in at the right place and you haven't got your nice entry lined up with the 2 brick walls between you and the stop loss. So if you had got in there, it comes back and then tests quarter theory, and then it does the drop. It does the drop down, and then, you know, the rest is history, as we discussed. So if you hadn't got in there and you'd missed it, bless it, it gives you another opportunity for an entry. Here, a green sell candle below the 62. Your previous confirmations are still all valid, and that is your 3rd confirmation for the entry there. Okay.
Thank you so much. That was a really good explanation.
So, Sarah, can I ask a question? When do you take cognizance of the Elliott waves then? Because I know I asked a question the other day.
Sorry, when do you what with the Elliott waves?
When you take cognizance of the Elliott waves? Because,
oh yeah, that's a long word. We don't use words like that.
Oh, what cognizance? I've just learned it. Because I remember I asked a question the other day, and I thought there were 3 confirmations that potentially was going to be a buy, a potential buy, and then you said to me no, it was a sell because of the Elliott waves. Now, I haven't done any of the Elliott waves at all with the confirmations. I've just done as you're doing now. Do you take cognizance of those at all, or no?
No, because it's very. I can't remember that particular question. I think we were talking. Is that the point at which I drew it with my yellow brush mark and drew the Elliott? Yes.
Yes.
So I think the point I was making there is we look for the reversals in the. No, it's not. We look for the reversals in the Elliott wave. It is what is happening when we draw the Fibonacci on, because if you're looking at a whole Elliott wave, it's very difficult to spot where you are in the Elliott wave while you're actually, you know, in the charts trading. You don't always know which one you've caught, and we want to catch that nice long extension leg, like on here. Where's it gone? Like on here. That would be our ideal one, wouldn't it? If we could get in there and keep stacking in all the way up. That's your long Elliott wave. But it's very hard once you're trading in here to know if you're in at the right reversal point on the Elliott. You know, you just can't always. You can't tell. I don't even think Chance says he can tell always. I'm not as proficient as him on Elliott waves, obviously.
Well, that's why the question I asked you the other day. And then you said, oh, no, like the Elliott waves. I thought, crap, I hadn't even thought about Elliott waves. We're just watching all the quarter point and the EMA and things.
Well, yeah, but what I was trying to explain was when we put a fib on it and we say it's the reversal off the 61.8 or the 88.6 or whatever, that is what is happening. It's the structure of the Elliott wave with that reversal in the Elliott wave point. But as to which leg of the Elliott wave, it's very hard to see which one you're in because we're on the 1 minute, remember? So we're on the whereas that is an hourly time frame, that C to D.
Yeah. Okay, thank you, Sarah.
So we'll look at the other trade that we looked at. And the other thing I would encourage you to do, I was going to do it today, but I didn't make time to set it up, is go through the calculator of why it's so important to work on return on investment to risk to reward, i.e. this whole compounding issue of how much you're risking on your stop loss to how many pips you're gaining, because all professional traders compound their account and think of it like that, and Chance goes through it beautifully quite often, getting his calculator out, and I thought we ought to do a few of those just for 5 or 10 minutes just to get clear in our head what we're all trying to achieve out of this. So
I'm not even clear with using the the slider. I was playing with it last night, trying to put the when you go to settings and put in what you need to put in. I'm not even sure how to work that properly.
That's okay. Well, look on this next one, because I love using the slider like that. So just do it on this next one we were going to look at, which was the other trade from yesterday, and then what happened with the two that, because we looked at 4, 2 of them didn't take off, which didn't matter, but just kind of to go through the thought process when you're getting on the computer for your hours trading, looking at the setups and then deciding, which you're going to take and what's going to happen. So just take those brush marks off. So we've got, let's go back to our point here. And we can look at the slider bar on this one. So again, on this trade, similar thing. We were lucky in that we had some very nice moves right at the same time. Doesn't always work out like this. So GCAD, another very fast pair, and I decided I didn't really like what I'd done with that trend line, so I'm going to take that off. So we come into New York Open. We'll just break this down then. So why are we looking for a sell? Because this is slightly different. If you look at the white lines, that is a pitchfork leg and it's over 60 pips. So at this point we said, okay, we think we can take a quarter, we can take a quarter theory trade if we want, which is that 695 there. The blue line is my sort of slider line that I use when I'm trying to move my stop profit down. So New York opens. Let's break this down. We come to the quarter theory, and it does a big, it comes down. So we could have gotten here, could we? Because we're under the 62. Now that's slightly difficult, isn't it? Because we haven't got a pitchfork touch. This type of trade is the exception to the rule. So what you need to do, therefore, is put a fib on it, find a channel touch or a 1 minute break of trend, because you need that third confirmation. So that was why maybe I ought to put that back on, because it is what I did. So I'd put the trend line for an upward trend, because we were looking for the break of trend, which we got there, plus under the 62 and under quarter theory. So that was why we said we could get in there. Come on. And then it gave us a big drop on this one. There. So if I magnify this entry point, and there's the fib from the previous high to the previous low, and then it came past, but it didn't hit the 78.6. And here it came two rejections, one slight slippage, but that's on the hour, and then just probably about 0.5 of a pip off it there. So we love it when it perfectly touches, but we were happy with that. So we've got the 61.8 rejection, and then let's magnify the entry, and then we'll look at the slider bar. So there's our 61.8 rejection. Just get one of those. So you've got two rejections off here, although one slipped through because it was the hour there. And then we've got the break and the retest of trend there. So there's a confirmation for you, because remember, we're trading without the pitchfork. And then just keep breaking it down, just keep breaking it down. You're looking for a sell. You would not enter this trade because it's above the 62. And there is the sell candle, the open of this one here. So it's giving you the break below the 62. So your confirmations are now lining up, but you're still above quarter theory. You would not get in a sell trade above quarter theory in case it decides it doesn't like it. You see here in the reverse scenario, back to the left, look at all those rejections there. So it just didn't like quarter theory, and it was too strong for it, and that pushed it back down to the pitchfork. It gets to the pitchfork and it does 1, 2, 3, 4, 5, 6, 7 rejections, and that stall out there tells you it's turning for the buy. So learn to read the charts. All those stall outs are telling you a story. It cannot break through that pitchfork, and then it stalls out to tell you it's turning, and that's what chance means by the feel of the charts. So 1, 2, 3, 4, 5, 6, 7 doji candles stall out right on the pitchfork. And I've actually, as you know, I do sit here for hours all day staring at the charts. I'm still at that stage of my trading journey to some extent. I try and put the alerts on and leave it alone. But when I do watch the charts and I can see it literally squeezing itself along, I can literally see it like an elastic band. And I know it's going to pop when I watch that happening minute by minute. It's fascinating. And then sure enough, boom, up it goes. So that's what's happening on the opposite side. So you wouldn't get in on this yet because it's still above quarter theory. And here is I'll measure the pips in a minute. Here's your break and your retest of quarter theory with a nice long green candle down. So you should be able to get in on that candle, and you can see it has wicked perfectly off quarter theory. So let's see how much that break and retest was. 8.2. And you've got the wick telling you the story. The wick rejection tells you the story there as well. So you've got your entry there. That's your entry. Okay, does that make sense? Because you've stacked up your entry confirmations. Yeah? So I will be happy getting in there. And then, you know, it comes down, put the replay on. Just play it through from open of the session. Pay for the replay button. We may as well start using it. I don't use it very much on here. So open of New York, price decides it's still pushing up. It moves very fast because it's GCAD, very fast, much faster than USD CAD. Comes below the 62. We've had the rejection off the 61.8, but it's still rejecting off quarter theory here. Comes back up. Still coming back up, not breaking the trend, but it's just about to break that trend there. There's your break and retest of the 1 minute trend. And then coming below the 62 and below quarter theory. And then it does come back up a bit, but it's not. You can see the 62s now curling down to meet it. And now you should be very confident to keep staying in this trade because of that crossover. The 1 minute trend has crossed the 15 minute. The 1 minute trend is our current momentum in the market, remember. So you know that you're safe to stay in this. This is a good long move. And as Chance says, we don't get into these faster pairs to come away with 13 pips. You don't get in, you get into GCAD, all the GBP ones, to come away with 50, 60 pips if you can. But usually, you know, you've got to look at what session they're in, and they'll usually move, obviously, at the beginning of London session. So let's just finish playing that. And this went 45 pips down to here. And then if you hadn't thought, if you thought to yourself, okay, is it going to push down here? Let's see where those, what levels those are. So that's your take profit 1 there. And take profit 2, it's hit take profit 2. And at this point, you're 40 pips, 45 pips up. So that combination and those wicks, you should probably think about pressing the button to get out of the trade. I would have most definitely at that point. I'm pretty sure I would have. It's not going to carry on pushing down at this point. If you did stay in, then it's come back above the 62 and the pitchfork, which should give you another warning that it's reversing to get out of the trade. I can't remember what it does from this point. So back down, rejection off the pitchfork, rejecting the 62, coming up now 62, shoveling it up. Is it going to cross the 15 minute? Yes, it is. Back up to the quarter theory, rejects off quarter theory. Okay, doesn't like that at all. 1, 2, 3, 4 rejections. But it's crossed here, and it, oh gosh, look, that's amazing. So, this is coming up to close of the day. Doesn't like quarter theory at all, and this is all stall out. So another reason, think of the time of day. Another reason, who would want to be stuck in that? You most certainly would never find me stuck in that. Never, ever, ever. I would have been well out along here, because I would have been thinking, close of day, I'm fed up, I want to go and get my dinner. I would have been annoyed I hadn't got out down here, but I would have definitely, all those rejections on that pitchfork, there's no way I'd be still sat in that. That ain't going to happen. So this is all close of market. And just test, you know, it's just testing. There's the quarter theory again. And if you remember from looking left, it couldn't break that, and it's very late in the day. It's not going to break it again now. So it's just doing its thing. And then we'll look at the slider bar, and I can see 2 old little pitchforks, a green and a purple, and that's exactly where that price is at the moment. Now when to Tokyo. Tokyo usually only moves a range of about 20 pips on average, maybe up to 50 sometimes. I used to trade it to practice and everything, and I've been sat on Chance's session and sometimes made 20 pips. I thought, well, I may as well sit here and be paid for it, but I decided it's not a very good idea to concentrate on 2 things at once, so I try not to do that now. And then I get tired if I do get stuck in something and I think, oh, now I've got to sit up and watch it. Just be nice to see what happens at the beginning of London on this. So rejections again off quarter theory. And I was talking to Les yesterday about Wyckoff and the banker's strategy, and how you can tell from the range that is reached in Tokyo what you can do with the candles when it opens in London. But we can go through that as Les joins our sessions from Monday, where he'll be doing pitchforks and Wyckoff with us for perfect entries for the swing. So I'm very excited about that. I'm not going to play the rest of it, no point, but there's the quarter theories annoying me now. So you see this time, Friday though, didn't do a lot today. So another thing you need to look at is you get bigger pips on a Tuesday to Thursday, obviously, than a Monday to Friday. Monday, the market's settling down, and Friday, as we know, particularly after Friday lunch. And there you are, you see it goes and does that on us today, just before lunch. So bit unpredictable, but generally speaking, I mean, I haven't traded today, I didn't need to, but you could sort of say, oh, I've missed the move there, but I'm not too keen on trading on a Friday myself. Right, so that's that one. Let's just go back and look at that slider bar. So when you're using the slider bar, I put it exactly where I think I want to get in. I know that's sometimes difficult to say, but let's assume this is a pitchfork rather than quarter theory. So I will start by just generally trying to get it where I want it. So in this case, it's a GBP pair, so I'll set it at about 15, as near as I can get it. And just personal habit, I'll always set that at 20, then I know that's my 1 to 2, even if I know I'm aiming for a level further down here, because I use that blue, I switched it off, I use the blue bar myself, so I'll be pulling my blue bar down. There's, chance doesn't do it like that. It's just the way I do this. I've just got used to doing this, and then I go to my C trader, where C trader you can slide the stop loss up and down and the take profit. I don't touch the take profit, but I touch the slider. I use the slider bar, the stop loss slider bar on C trader, and I'm pulling that up or down. And I'm only looking at the pip count. I try not to look at the money. I tell you, I do not look at the money. I look at the pip count, because as your account grows, it tries to make you think, oh, I think I'll close out now. And you should be thinking in percentages to compound your account and pips. Otherwise, once the lot size gets bigger, it's tougher on you mentally. So don't look at the money. Don't look at the money is my advice on that. So I'll get it lined up approximately, then I right click on this and I come to settings, and then you've got inputs. So what happens is you need to have your entry price fairly accurate, because if I had that at it doesn't really matter, but anything 495, but I wanted to enter at 500, then what 495. If I put that at 495 and then adjust this to 200, because it's a pipette, so that's 20 pips for 200, and 150, just clicking on that button, 150, and then click OK. The problem with that is that it hasn't come off the entry price and it's shoved it right up here. So the grey box is your entry price, 69495. The red one is your stop loss, and the green one is your take profit. So you have to do it from the entry price. So I come back in, once I've got in the trade, I then write down from my C trader what the actual entry price was, because of chancellors work off TradingView, but I tend to do it like this. I work off the price I entered in that's recorded on C trader, then I put it in here, I come back and put it in here, and then do I do that where I enter? Yes, I do that. I always do that. Then I come down like that and then adjust it like that. Then I know I've got that line exactly where I entered. That's how I do it.
That's great. My one question was, if you could go back to the settings for just a sec.
Yeah.
See where it says risk and 2, is that your 2% risk? Because I was clicking the percent box.
I never bother with that, and I never even look at it. I never bother with this bit up here. And the reason I never bother with it is because it's got CAD against it, and I've got to sit here and do this, and I've got to sit here and do that. I don't bother with that, because that just affects how it looks here. And all I care about is how many pips I'm just using this as my pip counter, and looking at making sure I've got my stop loss red box in the right place so I don't get taken out for the trade. Oh yeah, I'm sorry, I never bother with that.
No, that's why I was getting confused, because I'm like, I'm not sure what this risk is, and then when I try to click the percent next to it, thinking, well, maybe that's the percent box, then it's just like confused me completely. So
yes, no,
ignore the first two boxes basically.
Yeah, well, I do. This would be your risk, your 2% risk.
Yeah.
Yes, it would. But in order to make that operate effectively, you'd have to type in your account size up here.
Right.
And I've never understood exactly why.
No, I was confused with that.
I think that's for monetary amount. You can switch it to monetary amount like you can on my FX book. That's what that is. So no, I never bother with this. So whatever appears on here, this stuff here, I'm not even looking at that. I just look at the 20 pips, the 1 point. Oh, mind you, I suppose that's interesting, isn't it? No, that doesn't affect because I do look at this risk to reward ratio, but that's just taken off these pip counts, I think. I mean, Les might be able to throw some more light on that, but
no, that's correct, because the risk to reward is based on your pip amount.
Yes, so that's, and I do care about that figure there.
Thank you, Sarah.
Yeah, so that's that.
What's the gray box?
The gray box is the entry price, Jason.
Oh, okay.
Entry price. Red for stop loss, green for take profit.
Yeah, no, I know.
Yeah. I'll just tidy that up, and then we'll look at those other two that we looked at but didn't take. One was EN. We'll go to EN. I think I kept the setup on here. Yeah. So what did EN do? This was the other one we were looking at. And again, quarter theories disappeared. So horizontal line, 14600.
It would be 174,500.
500, sorry. Thank you, Brian. And just change that to orange, just to make sure my charts stay as beautifully colourful as you all like them. So on the 1 minute chart, Euro NZD, another 10 out of 10, a very fast pair. This is the one chart says he gets greedy on. So we marked it up with our, let's just find that, there's our 100% fib. Remember, we happened to use fibs quite a lot yesterday, but we don't always. Sometimes they just don't work and they can confuse you. But we put the fib on down to that 100%. I can see I've slightly, you should make sure they are exactly accurate. And we were looking for, I left the yellow mark on for you, the break and the retest off quarter theory and down for the sell, and it decided not to do that. So we'll replay this one from open of New York. So we've got our, and what we liked about this one was the fact it's coming down off that D point. So we've anchored our trend line on that candle up there. Actually, I think this is a good example of the reversal on the Elliott wave, because there's your leg down, and that's a reversal point on the Elliott wave back to there before it carries on down. So that's I think that, I may be wrong because I'm not brilliant at, I'm still learning them. 1, 2, 3, 4, 1, 2, 3, 4, 5. So I think that's that one there. Do you see what I mean? That's what so you're looking for that fib that's coming back to that point there. Does that make sense? From there, That's what we're doing when we put our little Elliott wave on the 1 minute.
Yes, yeah.
Yeah. But when you're in the Elliott wave, when you're trading in the Elliott wave at whatever point, it's very, very hard to tell whilst you're in them until they finished forming.
Yes, yeah.
Right, so we're going to come back to do it again.
Well, you already wound it back to the start of New York.
Yeah, I know, but I forgot what I was doing, Brian. Sorry. Hang on. There we are. Because to get it in the middle of the screen. Okay, so open of New York, and what have we got here? We've got it playing in the Fibonacci, the extensions of this pitchfork. We know we're looking for a sell off the D point. We've put our 1 minute trend line on it, and we've got our quarter theory there. We're now coming below the 62, and we're waiting for a break and a retest, but we are waiting for it to break and retest that quarter theory because it's sat there like a great big brick wall. Hence the reason we don't want to think about getting into it until it's come underneath that. So it stays under the 1 minute trend. It's now playing along the 62. It's starting to come down now. All good, we think. That's looking good. So it's under the 62. It's under the 1 minute trend. It's done several break and retests in the extensions, and now it's breaking down through there. But we had the fib rejection, but no, it's not liking it. It's rejecting off it, and now it starts to come above. It can't make it. It's failing, even though it's got the lower highs there. How many did it break by? And it broke by 11 pips. So you might be thinking, as it came up here to that quarter theory, that it's done the 11 pip break and retest. It's under the 62. It's done the break and the retest off the pitchfork, and you're under the 1 minute trend. You have every confirmation. This is a good example, actually, of why we only get in on the candle that is in the direction that we want, because you have all the confirmations technically to get in for that sell. But you would wait for an open candle now, a sell candle, in my case a green one, I use green ones, not red, to come down under quarter theory. And what does it do? You don't get that. So you wouldn't have got in this trade anyway, because you'd be waiting for that candle, an open candle, a green one, on the right direction of the trade you want to take. And it doesn't do that. As soon as you've got all your confirmations, it says, oh, do you know what? I've changed my mind. And there it goes. It's gone. Not going to do it. Market does what the market does. And there it is, shoveling all the way up. And I'm trying to think if we've got any criteria here for a buy, but we haven't. We haven't, I don't think, because it doesn't do. It does a break and a retest back to the 62, but we haven't got the break and the retest. How many pips is that? And I do know that what we don't do is get straight into a trade the other side, because you've got a break and a retest there of the pitchfork outer extensions. It's a bit complicated, this one, isn't it? Because we've got this white pitchfork here. But
which pitchfork is current?
Well, exactly. That's a very good question, isn't it? The white one. The white one's the current one.
Sarah, how many pitchforks do you have on here?
What, on this pair?
Too many to count.
Yeah, because that's why you said which one is current.
if I go to the object tree, I've got all that list there is pitchforks. So I don't know, what's that, 40, 50? They go back to the beginning of 2019.
Are they all necessary, or you just need one pitchfork to
You can
figure
trade.
things out?
We've traded off pitchforks 300 or 400 days old. They're all valid. That's the beauty of this. Once they are, the current scan will always take precedence, but pitchforks remain valid forever if they are drawn accurately. And then you do need to go back and just check that they haven't glitched on you, that they've stayed true, that they've followed, that you can see the rejections of price on the, that it's respected the lines. I was just trying to find where that purple one is. And actually, the purple one is the second pitchfork, just to make it more complicated for you, which I've drawn on when price moved out of the current, out of the scan, that scan, and I was trying to pick it up in the opposite direction to whichever scan it was in at the time, which is that one. This big one's engulfed it. So this is quite, there's this little scan sat underneath there, which usually I change the color of them. I haven't changed the color of that. Usually I'll change it to a green once it's gone to there, just to keep my charts nice and colorful. So I was drawing a second pitchfork off that one, which is X to A, because price had gone out of it. So I think it was on that one.
You could have two pitchforks going from A to B and C to D, right?
No, you put the second pitchfork, you only draw if price moves out of the first one, and it's in, you put the first touch in the middle of nowhere, and then it's X to A. It's X to A with either a C or a D touch, depending on the direction of the scan. This one's a bit difficult to show you because I've got this big overlaying scan on top of it now.
Because when you said one is not current, kind of mean, it's like, well, if it's not current, it's not accurate.
It is
accurate.
It is accurate. They're all accurate because price, if I came out to the 4 hourly, for example, just to show what price has done over the months, then here, this white line is price. So when price has moved from round here, like all the way up there, I can pick that up off this scan. I don't have to wait for new harmonics. That's the beauty of this strategy, because I can pick price is up there in this region, and I can pick it up off this scan from the D point of the 3rd of July 2019. Let me just get rid of that brush mark in the only way I know how, which is that. And then I would, so if I want to show you if that is still valid, I see if I can. Because July 2019, that's now at what, nearly 300 days old, something like that. So
it's almost a year old.
Yeah. So here's a scan I drew with the D point of 3rd of July 2019. I'm on the 4 hourly, not the hourly. But is it still valid? There's all those stall outs to the pip. Can you see to the pip? In August, it's touched that line. I mean, it's still a very valid scan. I can see that by looking at price. On the pink line, sorry, there's so many lines for you to look at. So if I follow that up using this pink one, Normally I'd be on the hourly. I don't know if TradingView should let me go back on the hourly. It's better to show you on the hourly than the 4 hourly. So if I'm trying to trade, and let me take that yellow off. So a year old scan, I can't show you quarter theory on here, which is a shame, unless I draw one on, because that's not going to show me the figures. Horizontal line, 18.4, 1845. 185. That's a quarter theory there. Perfect stall outs there, and the pitchfork above the 62. I could have taken that. I would have been very confident taking that for a buy, and that's from a scan a year old, because I've got quarter theory, I've got pitchfork. Hang on a minute. I've now got. I need to change that because I've got 2 scans I'm trying to show you, and they both happen to be in purple. So I'd have to go back. I would have to go back and make sure I'd taken off. I just had the correct one that I was meant to be looking at. So if I put that, I know it's that one, in, say, bright pink. Does that help me now if I do it in yellow? Like the yellow. Put it in green. That's it, it's that scan, that green one. So I've got all these rejections off that pitchfork. I've got pitchfork touch, I'm above the 62. I wait for it to come above quarter theory, and I could have got in there off that pitchfork, not this one. But that one would have done equally well, but I'm just wondering if that was news, because it's gone up quite fast and big, hasn't it, there? So that could have actually been news, come to think of it, that one there. But pitchfork and that line. So let me see if I can find another one to prove the case. I'd have to find, that's a quarter theory there, isn't it? 1.88000 or 1.9. Is that the next one? 1.5. Is that the next one or that one? 50 pips, 5. Too big. I'm on the 5. Still too big. So if we've got quarter theory, oh, it's one at 1.86. So that's 100 pips, and we want one in between. Is that right? Just looks very, I'm not very good at drawing them on myself. So do I want another one in there? Yeah. I don't think I can hear you, Brian. Have you muted out?
Yeah, I was going to say at the 100 pip scale you're on,
it's a bit weird, isn't it?
Yeah, it's a bit weird, but there's lots of quarter theories in there. But
there, so there's one there. I was just trying to find a trade that it's because I'm on the magnification's not helping.
Well, you're also on like an hour time frame, so it's going to be hard to spot a trade entry we would take since we.
Yes, and I can't go back to the 1 minute that far back. I don't think, can I?
No, it's only 2 weeks.
Yeah, so that's why it's confusing me. It's not going to work. So if we just look at I'll take those off because they're confusing.
But you can, for the purpose you're illustrating here, Chance does it too. You can easily show that, hey, you know, at
how it's respected
the pitchfork levels.
Yeah, so if you ignore those big spikes, which must be news, then you can see how it's stalled off there. Then it's shot up on the news, hasn't it? It's done something there. I mean, this is a very fast pair, so you're going to get these wild swings. But look to the pip. Look at that there. So that's a year-old pitchfork, and all those rejections there, and there, and there, and there, and all along there. So it's still very valid. So that's why I don't need to use Vibrata. I don't use the Harmonic scanner. I don't take trades off the D point. I don't use any other strategy. I've got pitchforks 100 days, 300 days old, even 400 days old we've traded off that I can use. That's why I like the strategy, because you make sure you're a free person. I could be on holiday in India without even having the scanner and say to myself, oh, I think I'll do a bit of trading, and I could find a pitchfork to trade off because I've built a library.
I mean, I'm even discovering that too. My pitchfork library is only about 30 days old, and I'm finding, you know, exits off of previous pitchforks in the middle of current pitchforks.
Brilliant. So it didn't like our idea. We had all the setups, but you would have been safe because to the pip it rejects off that quarter theory and it turns the other way. It didn't give us a green candle coming down, which is what we would have needed, which would have been our entry here. And instead it did exactly the opposite. So, I mean, no harm done. That market does what the market does. One of our setups didn't work, two of them did, and the other one didn't either, which was, I'll finish this one now. So we've been on quite a bit. I'll just show you the last one for those people that are still on. Get that cleared up. And the other one was EuroCAD, the last one we'll look at. So when we were in this one, again, we had put the fib on from there, high to low. There's open of New York. We were looking for it to reject off quarter theory. That's why I put that reversal. So it must be, and we said there was a pitchfork underneath by about 3 pips. So I said, wait for that. That's quarter theory going on. Oh, God's sake. I won't replay it because of the time. So we were looking for the, there's our downward trend. We were looking for that break off the rejection off the quarter theory, or that's right, I said price will either do one or two things. It will either reject off quarter theory or it will go for the break and the retest and up. And actually it went for the break and the retest and up. And it did that after our session. We finished here, and it gave you the break and the retest and above the 62, and it did that
You gotta love your fibs. Look at where that went to the 78.6 line there.
Oh yeah, isn't that fab? Oh, in fact, that's right, Brian. That's what I said. I said we were looking for the reversal back up to the 61.8, or that's why I drew the yellow line like that. And it did exactly what I said, but along there. Do you remember? I drew it up to the 78.6 and said we were looking for the reversal back to there. We're looking for the sell. So we want it to come back to that point. And it did exactly that, but it made the move later in the day at 5:30 UK time. And then I can't see where our pitchfork is. Was this a bigger scan than where we were looking? Oh, there's the pitchfork, sorry. Yeah, so it came back up there, but and I can't see quarter theory, but you wouldn't have gotten this till it had come down below that 62. And I can see a previous scan behind it. Sometimes that does it does cause price to stall. There's a previous pitchfork there, and I better turn that off, otherwise we're going to go blind with looking at it. Let's fade that out. So rejection off under the 62, and then that's quarter theory coming back on now, isn't it? 1.53500. Let me just draw those on before we go. Clone. And down at that level, 1.53. And come back to where we were looking at price. So the fib reversal back to the 78.6. This is a big break and retest, so it takes a longer time frame for these things to play out. If the break's back, I mean, it's huge, right down to there. So it's a bit difficult to count this one. But then you've got, in fact, I find this a bit of a difficult one, although you've got the fib. So let's break it down. We've got the fib rejection. We've got it under the 62, which is the second confirmation. We've got the pitchfork touch, which is the third, but it doesn't give us up here another break and retest, but it has done all these break and retests and rejections along here. And this is our sort of Bart Simpson head, isn't it? Isn't this our, well, not really. No.
It's hard to say.
Hard to say on this one.
See, that's kind of the problem I'm kind of having trying to take a pitchfork trade off the D leg, because you can't really get yourself a trend in there.
No, you can't, can you? It's a difficult one, this one. But I think that I would have been comfortable with this because it's respected that D point pitchfork so much with all those rejections. And then because we got the 78.6 rejection, but actually it only took us down to this point. It didn't take us down to the 0, did it? So you couldn't have got in this anyway until you were below the 62.
And then how many pips does that work out to?
Yeah, good point. That works out to 17. Because then it comes back up to test the 15, and it does drop again. So I agree with you. I find this one a little bit difficult because you're not directly playing off the pitchfork. And sure enough, it stalls out all the way along there, which is quite a stall out, isn't it? 10 hours. So all the way through Sydney and Tokyo, then it makes a move of, but wrong direction for us because we wouldn't have been in a buy, 43. Well, how many pips is this leg? Oh, it is 73. So technically we are allowed to take buys off this. So
but it hasn't come back to the median point of the pitchfork from the D though.
Doesn't matter. If it's over 60 pips, chance says it's fair game either side, even if it hasn't got to the median.
Okay. Well, the way I look at it in my current level of skill with this here, there's lots of other trades, and I'd rather go for low-hanging fruit than trying to make a trade work.
Agreed. It's more risky, I suppose, isn't it? But if you break it down as to what you've got here, then coming over to this point, which is open of New York today, how many pips did it break, that pitchfork? 15 pips. So here, if we just put the magnifier on it, so here we've got open of New York, we've got, if we break it down, we've got pitchfork touch, we've got a break and a retest of 10 pips, we've got a fake out because it's the hourly candle, we've got higher lows forming and higher, let's put our pivots on, and higher highs forming. Okay, you won't be able to see what's happening up there, but you can see it's turning here. And then it's above the 62 and it retests the 62 there. So if we then put a, whoops. But we haven't got the safety factor.
Yeah, because you're now on the current pitchfork, you're going in between the D leg and the outer extension.
Yeah. Now, I don't mind this trade because I still can have my 15 pip stop loss with quarter theory and that pitchfork and the 20 pips up to there. And it still goes up. So what I was going to look at was, does it do a break of trend line, anchor it on there. I'm saying in my head, mustn't fiddle with my pitchfork.
Your trend line.
My trend line. Yeah, so it's not a brilliant trend line, is it? Probably there, I'd put it. Because I've got an anchor up there, 1, 2, a little bit of slippage there. But there is a touch there, 3, 4, 5. And it just about touches it the other side there as well. And then it comes back and tests it there. So just to finish off, I'd say break and a retest, pitchfork touch, above the 62 crosses. And then if you look at putting a trend line like this, I've got that on. I don't think you're ever going to cure me of this habit. I'm sorry. Just me. I don't know why I do it, but I do. Probably makes me feel that my trade will go better if I've got it completely accurate, which of course, so you wouldn't have all those upper touches at this point. You'd only have these bits down here. So if I'd been drawing that up, let me take the fib off. Don't need to have that as well. So if I was looking at this point here and I've got all that going on, then the way I always draw them up when I've got trend lines like that is I say, okay, is it going to fail me and come back down like that with a break and the retest for the sell, or is it going to do that and go up for the buy? And indeed it does that. So I could have got in at that point. I wouldn't have, personally speaking, I wouldn't have got in there. I wouldn't have known, but I would have got in there. But then the problem is the amount of stop loss, I think.
Well, you would get down to this, your stop loss would cover the 50-minute EMA and the pitchfork.
Yeah, let's see if I did get in, if we had got in there. Yes, so it's covering the 15 EMA, but I'm not sure I like that so much. So if I had to, but it is nicely above the 62. There is enough there for the buy. At a push, I might go to 18, 17 or 18 on my stop loss. I very rarely do 18 actually. And you're right, because it's against the trend. Would I have actually taken this trade and not looked for something else? Probably not, Brian, to be honest. But that is how I would break down looking into getting into a buy setup. And that would have been my entry point here. When it retouched there on the buy candle. So pitchfork touch, break and retest above the 62. It breaks and retests the 1 minute upward trend, and it then tests the 62, and then it's off. And it goes up. It goes up 50 pips. And if you didn't get out there and you saw it stalling out at the 62, you've got a very good return anyway. And it's back stalling off quarter theory. So at that point, you would have said, okay, I might stay in again. And then you could have stayed in for another few more pips. So this is where you learn not to be greedy, because at 10 pip, well, okay, 18 pip, it is a bit more. But 50 pip return, I would have been out the trade up here, I think. And if it dropped back to here and I saw it reject off, I thought, okay, I'll stay in, and then it rejects again, I know I'll be safe. But I wouldn't have liked all the worry of this point here. I wouldn't have liked the worry of that, because I just wouldn't, you know, I'd rather get out somewhere up here on that amount of pips myself. Okay, so that's everything for today. And thank you very much for joining.
Well, thank you, Sarah. It's been brilliant.
Thanks,
you,
Sarah, for your time.
Yeah, well, you're very welcome. I hope you'll have a nice weekend.
Yeah,
and
you as well.
We'll just stop sharing. Oh, I didn't see if there was nothing in the chat. That's fine. I'll stop
There was
the
nothing in
recording.
the chat.